Hello. Welcome to our next class, that is your alternate minimum tax. Now we have already done minimum alternate tax. Now we are doing alternate minimum tax, which we also call as AMT. Now you have to remember your MAT was only applicable to companies and your AMT is only applicable to all SSCs except company. That means for company it is MAT and for everybody else it is AMT. So applicable on all SSCs except company. Only if SEC claims certain deductions, only if your SEC claims certain deductions will he be covered under your AMT. That is your 10AA. This is your SEZ income. If your SSC earns any income from SEZ, so that is your 10AA. Then there is your 35AD. 35AD is your special business, and your 80IA to 80RRB. These are your income based deductions. So only and only if SSC has these three items in his taxation and his NTI is greater than 20 lakhs. Both of these conditions have to be satisfied. That means that if I have 10 double income, but my NTI, if my NTI is 19.9 lakhs, if my NTI is 19.9 lakhs, or even if my NTI is 20 lakhs, I will not have to deal with my alternate minimum tax provisions, because both of these conditions have to be satisfied. That is, my NTI has to be greater than 20 lakhs and I have to take either of these benefits, either your 10AA, your 35AD, or your income based deductions from 80IA to 80RRB. Your AMT credit can be carried forward and set off up to 15 assessment years. So we also studied this in your minimum alternate tax. So this remains same. Now there is an amendment in this chapter. So hear carefully. Now your section alternate minimum tax calculation is given by section 115JC. Our minimum alternate taxation was given by 115JB. Remember the section MAT is 115JB and your AMT is 115JC. So AMT is your higher of tax as per income tax or adjusted total income into 18.5%. That is tax as per income tax. This was the same above also. Over here it is your adjusted total income into 18.5%. Now this 18.5% will be 15% for cooperative society. This is your amendment for May 2023. So instead of 18.5%, you have to multiply this by 15% and 9% if of course it is located in IFSC. This is the same above. Of course, this is also again post surcharge and health and education cess. Okay, now sir, what is my adjusted total income? How do I calculate it? Adjust total income. So that calculation I have given here. Now your adjusted total income is your NTI as per normal provisions of tax. In your normal provisions of tax, you get the benefit of 10AA, 35AD, etc., etc. So whatever benefits your normal tax has given, that is your NTI as per normal provisions of tax. This is your excess. You will have to add back any deduction that you received under section 10AA. This will have to be added back. Any deduction that you received under section 35AD, those specified 14 business, if you got any deduction under section 35AD, that will also be have to be added back. And then if you have taken any deduction under chapter 6A, these are your income based benefits. These will also have to be added, and any depreciation on asset, assuming 35AD not applied, because 35AD gives you 100% depreciation. So what we have done, we have added back the entire benefit that we have received under 35AD. But my SEC complains that, boss, if you are taking away my 35AD deduction, at least give me depreciation as per my normal income tax. That is, if I was not under 35AD, at least allow me that depreciation as per your rates. Therefore this will be subtracted. So this you have to subtract, that is depreciation on asset, assuming 35AD is not applied, that is depreciation as per normal tax provisions. And after this you get your adjusted total income. This will be multiplied by 18.5% for all SSC, 15% for cooperative society, and 9% for IFSC. I hope this chapter is clear, and I will see you in the next chapter, that is taxation of trust.